Something unusual just happened in Nova and is creating one of the most confusing markets that I've seen in my 10-year career. Inventories jumped 40% in some pockets. Bidding wars are still breaking out in others, and some areas have homes sitting for over 35 days with no offers. So that's why in this video, I'm going to show you exactly what to expect and what it means for you. Trust me, timing your strategy wrong could truly cost you. Guys, I've noticed this same misunderstanding again and again around here. Depending on where you're looking, people keep looking at the whole county for the averages, but you know why that doesn't work? Because the real story is happening street by street. Prices are up across Northern Virginia. The median home price hit about $715,000 in September. Despite what you might hear, that's steady growth in our core markets. Fairfax City's median home price climbed almost 2% and Alexandria's was just over 1%. Growth, no matter how small, is never a sign of a market that's crashing. But you know what? Inventory isn't exploding the way that it would in a true buyer's market. Active listings are up 40.5% year over year, sure, but we're coming off record lows. What we're seeing is more like a reset, not a flood. In September, there were over 2,600 active listings across the region. And the rate lock effect plays a big role in keeping supply tight. I'll get into the details in just a few minutes, but for now, let's get back to the numbers. So yeah, over 2,600 active listings sounds like a lot, right? But that still means that we've got less than 2 months of supply. This is where it gets confusing and why things feel so different depending on price and micro location. You could see a 640 grand townhome in Clarendon get 5 offers, all above asking, then drive 15 minutes to South Arlington and find a similar home sitting for over 50 days with 0 offers. Same market, same price, totally different experience. That's why understanding these pockets matters so much right now. That's exactly the kind of insight that I want you to have. And it's why I created this channel, to share the key insider info that you should definitely know before making a decision. Because come on, we're talking about buying a house. That's a big deal. Guys, I'm Hartunian, your trusted friend in real estate here in the greater DC area, and I'd love to help you navigate this market. So if you have any questions or if you just want to talk personally, go through any of this with me, reach out. I mean, don't hesitate, reach out at any time. My contact info is right below in the description box. All right, so let's go back to the numbers again. Homes between 500,000 and 750 are still moving fast with little room to negotiate. But once we cross 750 and head towards that $1 million mark, buyers start getting a little bit more leverage. And above 1.5 million, that's where serious negotiation power shows up, especially in Loudoun and Prince William. Before we jump into strategy, you need to understand the exact numbers that show which game you need to be playing in each pocket. So here's the deal. Winning or losing in this market comes down to knowing 3 key numbers. If you miss these, you're pretty much flying blind. So let's break them down for you. These are the numbers that really matter, and once you understand them, you know exactly how to plan your upcoming move. First is months of supply. Think of this as how long it would take to sell every single home that's on the market if no new ones went up for sale starting today. Right now, we're at about 1.9 months of supply across the entire region. That's about half a month higher than our 5-year average. But here's what's important. A balanced market usually needs about 4 to 6 months of supply. So even with that jump, sellers still have the upper hand. But there's one more thing that you won't hear from most agents, and it ties directly into the buyer strategy that I'll share with you in just a couple minutes. The months of supply changes a lot depending on the area. Arlington's sitting at about 2 months, Fairfax is around the same, and Loudoun's luxury market is still tight at about 1.2 months. Next up is days on market, or DOM. That's how long it takes for a home to go under contract once it goes live on the market. And this is where we're seeing a real shift. The regional average hit 27 days in October. That's about 40% higher than last year. But again, each pocket tells a different story. Arlington homes are taking about 35 days to sell. Fairfax homes are moving in about 28 days or so, and Alexandria's holding steady at 37. Same metro area, totally different pace. Now, bidding wars are still happening, but only in specific spots and price points. In Fairfax City, homes are still selling for about 100% of the list price, frequently with multiple offers. But in Ashburn, the list to sale ratio dropped about 99%, meaning that homes are selling just under asking. And when you compare what's going on across Northern Virginia, you start to see the pattern. Arlington's taking the longest to sell, even though its supply looks almost the same as Fairfax or Loudoun. That's your first signal that buyers are starting to gain a bit more leverage in some pockets. The supply and demand balance is actually pretty simple. We've got more homes available than last year, but still nowhere near enough for a true buyer's market. Think of it like this. If a balanced market means about 4 to 6 months of inventory, we're still sitting at 2. That's not abundance, it's just a little less tight. Okay, now that you know what these numbers really mean, let's talk about the 2 big factors that are keeping inventory lower than it should be, even with 40% jump in listings this year. Now we're at the point that surprises most people. With all this talk about the market cooling, why are we still short on homes for sale? It comes down to 2 big forces that most buyers and sellers don't don't even know about. First, fewer new homes were built in the past few years, and that created a gap that we're still trying to fill. Across Virginia, single-family housing starts dropped about 20% from the 2021 peak. In Northern Virginia also, building permits fell 13% in 2023, and we just haven't made up for it yet. What does this mean in practice then? There just aren't enough new homes being built to meet the demand from new families and population growth. Arlington's focused mostly on apartments and condos, not single-family homes, and that's the part of the market feeling the biggest crunch. The bigger reason, though, is what's called the rate lock effect. Around 1 in 5 U.S. mortgage holders currently have rates still below 3%, and a lot of them are right here in high-cost areas like Northern Virginia. Current 30-year rates are around 6%, so let's put that in perspective. If you own an $800,000 home with a 2.75% mortgage rate and you sell to buy something similar today, your monthly payment could jump by $2,000 to $2,500 just from the rate change alone. That's $30,000 more every year. So a lot of people simply just stay put. In a place like Northern Virginia where home prices are higher, every 1% difference in rate can mean $5,000 to $10,000 more each year. Sellers locked into those lower rates, they just won't move unless they absolutely have to. The result? Fewer choices and pricing that keep holding firm. You see this most clearly in high demand areas. Loudoun's luxury market is still pretty scarce, with prices up over 3% this year alone. Fairfax prices rose 4% year over year and remain balanced but strong. Even Alexandria, where prices are flat or up 1%, still shows homes selling at 100% of list price as well. That means they're still going for almost exactly what sellers are asking for from the start. But here's what's confusing for buyers. Even with low supply, what you see on the ground can feel totally different depending on where you're looking. Even with the tight supply, buyers are getting deals that seemed impossible 6 months ago. The psychology of the market is starting to shift in your favor. Even though the market still leans towards sellers, buyers are feeling a bit more confident. And why is that going on? First, there are fewer active buyers right now in general. Sales are up about 9% across the region, but new pending sales only increased to 3%. Showing activity, which measures how many home tour appointments are being made every day around the entire DC area, was actually down about 3.8% for 2025 overall. These all line up with the seasonal advantage that I'll talk about when I show you the buyer playbook as well. What this really means is that mysterious buyers are still buying, but there are fewer people that are out shopping and they're being even more careful. So what does this mean for negotiation? It means there's more room to work with in certain areas. The days of wild and no contingency offers are pretty much over. Inspection waivers dropped from around 30% at 2022 to about 18% in September of 2025. Buyers are keeping their protections in place much more often. Seller credits and repair requests are showing up much more frequently, particularly in areas where homes are taking longer to sell. In places where homes sell for 99% of asking or less, like parts of Ashburn or Outer Loudoun, buyers have real leverage again. But you know what really matters? Just like sellers need to understand how days on market affects leverage, and I'll explain that in a moment, the rules change depending on the pocket. Same metro, totally different results. A buyer in Fairfax City still has to move fast with clean terms, but a buyer in parts of Arlington or Prince William can take time to check things out and negotiate repairs or updates. You guys want an example? In Vienna, buyers still need same-day offers with almost no contingencies to win in many cases. But you drive 20 minutes to Centerville and you'll find homes that have been sitting for at least 35 days. Buyers there can keep full inspections, ask for credits, and even get sellers to help with closing costs. The key takeaway here is that more credits and fewer wave contingencies, they don't mean it's a buyer's market everywhere. It means the market's breaking into smaller pockets, and winning now depends on reading each one the right way. So if you're selling in this kind of split market, your strategy has to be totally different from what worked even 6 months ago. This is where a lot of sellers lose thousands by using outdated strategies. The old price high and negotiate down mindset is backfiring big time in today's split market. If you're thinking about selling, your plan needs to be local and based on data. Let's go over what's actually working right now. First is the price for the real buyer pool, not last month's hype. Use a local market analysis with these 4 key things: homes within a half mile or more preferably in the same HOA, exact bed and bath match, same home style, and pending sales from the past 30 to 60 days if possible. Pending sales tell a clearer story than closed ones because those older closings might reflect contracts from 90 days ago when the market looked completely different. If 3 similar homes in your area just went pending between $775 and $795, that's a good range to be in. Of course, you want to see how long the home was sitting on the market before it went pending to get an even clearer picture. This happened in the latest market data. Similar homes had sold for $850,000, but recent pendings came in between $830 and $840. Smart sellers priced around $830 instead of chasing the higher comps, and they still got bids in the first few weeks, rising that price. Okay, next we want to test demand early by using a coming soon status. Track clicks and show requests before you even go live. If you're getting strong activity around, say, 50 clicks and maybe 8 showings or so in the first few days, your price is solid. If not, adjust before you launch. You also need to win on presentation because professional photos, floor plans, drone footage, and a light pre-inspection are not optional. optional anymore. They're absolutely must-have. Good photos alone can cut your days on market by 15 to 20%. Just like in the Vienna example coming up, the presentation made all the difference. A quick pre-inspection showing roof, HVAC, and electrical updates gives buyer confidence and avoids surprises later. Now, let's talk about expectations. Overpricing leads to homes sitting too long and multiple price cuts. About 10% of homes in Nova had a price drop in the past month. That tells us that initial pricing is off. And keep in mind how days on market affect your negotiation power. Homes that sell within 30 days average about 99% of the list price. Homes that sit 31 to 60 days on average, only 98%. Once you pass 60 days, you're looking at even lower, 95% or less. Every extra week your home sits gives buyers more leverage. Price it right from day one because getting momentum back after a price cut is way harder than getting it right the first time around. And if you're buying instead, this split market is creating opportunities that we haven't seen in a long time. For buyers, here's a playbook that's working right now. If you're buying, your strategy depends on how well you read each pocket. Here's how to figure out the right approach. First, ask your agent for local data on the list-to-sale ratio and months of supply in your zip code or your neighborhood. Don't rely on county averages. A 98% list-to-sale ratio means buyers have leverage. Anything at 99% or higher still favors sellers. High competition areas with less than 1.5 months of supply and fewer than 25 days on market still need the same day or maybe next day offers with pretty clean terms. Balanced areas with 1.5 to 2 months of supply and 25 to say 35 days on market give you 3 to 5 days to decide. And buyer-friendly areas with more than 2 months of supply and over 35 days on market, now you can take your full time with inspections and contingencies added in. Just keep in mind that each home can still be case by case and your agent needs to do full due diligence to decide which route you need to take. Okay, also use timing to your advantage. From late November to mid-January, sellers who want to close before year-end usually accept better terms. Fewer buyers are shopping as well, which means less competition for you. In slower areas, negotiate credits, rate buy-downs, or repairs when homes are sitting longer. With 30-year rates around 6.2% right now, buy-downs make a big difference. For example, if a seller pays, say, 8 to 10 grand to lower your rate by about 0.75%, you could save up to $200 every month for years. Guys, we can also go over the break-even point here to find out if this is even worth it for you depending on how long you plan to stay in the home, or if another strategy would be best. For repairs, keep your inspection contingency. In balanced or buyer-friendly areas, use what the inspection finds as leverage. If it shows 4 grand worth of work, ask for a $4,500 credit to cover your contractor's cost. Most sellers prefer giving a credit instead of doing the work themselves. Keep your inspection and appraisal protections unless you know that you're in a true bidding war. Rely on your agent for that. Rising days on market and more price cuts across the region show that caution still pays off. Only drop contingencies in proven hot areas where multiple offers are already confirmed. Now let's go through 2 real cases that show how reading your pocket correctly can mean the difference between losing money and getting a great deal. Let's start with Pocket A in Arlington, in the Clarendon area. We're looking at homes priced between $600 and $750. Right now, there's about 2 months of supply, but homes are taking around 35 days to sell. The list-to-sale ratio is around 98%, and roughly 9% of listings had price cuts earlier in October. Here's an example. A 4-bed, 3-bath townhome that was recently updated was first listed at $685, based on similar homes that had gone under contract recently. In the first week, it got 12 showings, but no offers. Buyers said it was overpriced compared to recent pendings. By week 3, the seller dropped the price to $659, got an offer at $635, and closed at $648.5. So for buyers in this pocket, the best move is to wait for that first price cut, then come in with an offer that includes an inspection contingency for extra leverage. Now let's move to Pocket B in Fairfax County, in Vienna. Here we're talking homes between $700 and $850. Inventory looks about the same, sitting at 2 months, but homes are selling faster, usually around 13 days or so. The list-to-sale ratio is close to 98%, which means the market's fairly balanced. A 3-bed, 2.5-bath colonial in great condition was listed at $835, based on recent pendings. In the second week, it got an offer at $825,000 with standard contingencies. The inspection found a few small repairs, so the buyer negotiated a $2,500 credit and still closed at the full contract price. For buyers in this pocket, timing's everything. If a home's priced right, move within 3 to 5 days like I said. Keep your inspection contingency and use it for small negotiation power, but don't wait too long or someone else definitely will come in and take it. Now let's talk about how to figure out which pocket you're actually in. 3 quick checks make it simple. First, look at pending sales within a mile over the past 30 to 45 days. If there are several in your price range, competition is pretty strong. If there are only 1 or 2, buyers have more room to negotiate then. Second, check how many similar homes are active right now. If there are 8 or more with the same bed and bath count, buyers have choices and leverage. If there are 3 or fewer though, sellers still hold the power. Third, look at price cuts in your neighborhood from the past 2 weeks. If around 20% or more of active listings have dropped their prices, buyers can negotiate much more aggressively. If there are very few price cuts, expect homes to sell a bit closer to asking. Guys, Nova's housing market is breaking into distinct pockets with different rules. Success comes from reading your specific micro market correctly and adjusting strategy accordingly. The market is normalizing, it's not crashing. Rate lock sellers and limited new construction ensure that we stay supply limited despite inventory growth. But that doesn't mean that every neighborhood follows the same playbook. If you want help navigating your pocket, I track this stuff every week and I can help you make sense of all of it. Shoot me an email at rick@livingingreaterdc.com and we'll find the best option for you guys together. I've helped hundreds of families through the same process and I'd be happy to help you too. I love hearing from each and every one of you and going over your specific game plan. And something else is shifting in the Northern Virginia market that you might not expect. So check out the video on your screen right now. Thanks so much for watching, guys, and I'll see you next week.